And now you're up to date, everyone. And it's not often that I book guests back to back to back, but sometimes you have to go with the flow. Now, our this is a normal segment every Thursday. I have the great Jay Robertson from Opportunity, Arkansas. So once again, I want to introduce you to Jay. He's been with Opportunity, Arkansas, which is a homegrown group that seeks to improve life for Arkansans, improve the quality of life, should say. They work on issues that are conservative-based, school choice, the LEARNS Act. Jay has been very involved with the state, try to, through bureaucrats, alter the LEARNS Act from the legislature's intent, and he's kept everyone up to date. So I'll let Jay explain a little bit more about himself and his position with Opportunity Arkansas for our new audience up in Northwest Arkansas. But Jay, welcome to the show.
Well, thank you, Steve. It's great to be back.
Happy New Year.
Happy New Year to you. I missed our conversations over the holidays. I'm excited to be back and excited to be now broadcasting in the northwest corner of the state. So I actually live in Rogers, so I'm up here in Northwest Arkansas, so it's exciting to now have the show in a different part of the state. But as you said, Opportunity Arkansas, we're a group that was founded by Arkansans, and we're Arkansans who care about addressing generational problems in our state. So that's our mission. Our goal is to renew the land of opportunity, to simplify government, and solve generational problems that have held our state back for decades, whether that's a failing education system, a state government that takes too much and does too much, a broken welfare system that keeps people dependent on government. We spend our time researching these issues, but not just talking about it, but actually going out and working alongside policymakers to ensure that we can finally solve these problems to make Arkansas an even better place to live and raise a family.
Okay. So let us talk about state revenue now. Folks, just most of us do a fiscal year from January 1st through December 31st. The states, their budget year is usually, and this is the case here in Arkansas, July 1st through June 30th. And then the federal fiscal year is October 1st through September 30th. So there's a little bit of variation against the calendar year. But Jay, we're halfway through the state's FY26 budget. And are we still running quite a bit ahead on revenue?
Absolutely. We are. So as you mentioned, we like to keep track of this. Every month we get new numbers. The latest numbers show that the state is on track to collect a surplus of almost $300 million. So just in December, the latest numbers show that we're projected to have a surplus close to $288 million for this fiscal year. That is good news in that it shows that the state is in a strong position. It shows that our economy is growing. The other side of that is that it means the state took in more money than it needed to keep the lights on, more than we anticipated. And as I mentioned before, at Opportunity Arkansas, we think this means it's time to give that money back to taxpayers. Arkansas has made some progress on reducing taxes, and every time we've cut taxes, revenue has gone up. And so we have more than enough money now to give this back to the people who earned it. And yes. So the thing that we've advocated for and talked about at Opportunity Arkansas is pay as we grow. This is something that other states have done, and it allows for us to put in place automatic tax reductions that give Arkansans a pay raise. So if our position is that if state revenue goes up, it's time to give taxpayers a pay raise by cutting their income taxes and giving it back to working people. And the good news is the latest numbers show that we have more than enough money to do this. And so we're optimistic that we'll see hopefully some action on tax cuts this year now that we're into the new year.
Yeah, the fiscal session, instead of being in January, is going to begin in March after the special elections to fill the open seat in the State House of Representatives here in Central Arkansas. And then, of course, the late Senator Gary Subtlefield's seat up there in the northwestern part of the state. So hopefully the legislature will again reduce the income tax burden. And Jay, that's something that's good because that makes us more attractive to businesses that are looking to expand or move.
Absolutely. You know, our what Arkansas does here, we don't operate in a vacuum. So we're bordered by Texas and Tennessee, two states that do not have an income tax. Louisiana has reduced their top income tax rate to be below ours. Mississippi and Oklahoma just recently passed a full phase out of their income tax to put them on a path to fully eliminating the state income tax. And so we've made some good progress here. Like, lawmakers have cut income taxes, but it's been a while. It's been a while since we've gotten an income tax cut. And to your point, we compete for jobs with these other states. Young people have a choice in deciding where they want to live. And every dollar that the state takes in income tax is reducing the paycheck for people that are working in the state. And nobody benefits more from eliminating the income tax than young, married, working people. And we know that that's what we need in Arkansas. We need to reward these people to ensure that we have a better state in the future. And we're optimistic that we'll see some action on that soon, but you're exactly right. It's important to ensure the state remains competitive, and ultimately it's just the right thing to do to give it back to the people who earned it.
Yes, and one thing I'd like to throw out there, I did my research on this. We are blessed here in Arkansas that we actually have the lowest property taxes in the United States. Illinois just surpassed New Jersey as having the worst. And trust me, I was writing the check for property taxes. My parents had paid off their home, and between the homeowners association, insurance, and the tax burden was $10,000 a year. And it was a townhouse. It wasn't even a single family dwelling that my parents had. I think that we should direct some of this money for property tax relief for senior citizens that are 65 and older, that either we freeze their property taxes or eliminate some of them with this additional revenue. What are your thoughts on that?
Well, to your point, we do have one of the lowest property tax burdens in the entire country. And I know that it may not always feel that way for people who are paying taxes. Like, I don't like paying any taxes, so I never get excited about paying a tax anywhere I have to pay it. But the deal with income tax is we're already at a competitive disadvantage with a couple of other states, and there is a clear path to get here. Like I said, every time that we have cut income taxes at the state level, revenue stabilized, there's money to do it. There's no reason we have to have that. And young people don't have a choice when they want to go out and decide to earn a living or not. Their income is taxed at the state level, and there's a clear path to getting us to zero. You know, we want to lower the tax burden across the board, but we think it's a priority to start here with income tax because it does affect the young people who are working, and that is critical for us to continue to grow as a state, to attract jobs, to keep our kids and grandkids living here when they finish school so that they have a good high-paying job. And then, let's reduce the tax burden across the board. But the good news is we've got a path to get here in a way that benefits all Arkansans in the near term.
Now, just in case somebody's tuned in from the governor's office or the Arkansas Department of Economic Development, let me let you in on this. It's starting to hit the news, but I didn't get to it yesterday with all the breaking news about Minneapolis. But folks, Chevron is closing down their corporate headquarters and moving out of California. And now Valero has done the same thing. And now I'm getting from sources on the other coast, from the left coast to New York City, that businesses all over New York are looking to get the heck out of Dodge with Marxist man dummy. He's going to destroy New York City. He's going to ruin the entire tax base. And those poor folks are already so burdened on taxes and nothing to show for them. So we could recruit some jobs is what I'm getting at with the right
Absolutely.
package.
You know, We're already, I think, a step ahead of places like California and New York. But in reality, we're not just competing with them. Like we said, we're competing with Texas. We're competing with Tennessee. And so to ensure that we're still getting those good paying jobs, income tax is a great place to start. And it's the reason we prioritize it, because we think it would have the most impact. And once again, it rewards people who are currently living here. We've had a few rounds of income tax cuts in the last 3 years, and every time the state cuts income taxes, paychecks increase. I mean that's money that directly goes back into the economy. It circulates, it benefits the community, and we're optimistic that we'll see more progress on that very soon.
I think so too. I think some of the legislators, senators, and representatives that I spoke with are inclined to want to do that. But Jay, you and I both know that the fastest time on earth seems to be radio segments, and we're already up against it at the end. And I know you can only join us for the one segment today, but I appreciate you coming and taking time with us today and updating us on the revenue and the taxes. Folks, every Thursday, usually Jay's on with me for both segments from 4:30 to 5, but today he has it. But anyway, thank you very much, and Happy New Year, Jay.
Thanks, Steve. Appreciate it. Talk to you next week.
Talk to you next week.